Scott Groves with another mortgage mystery. What is an APR? An APR is an annual percentage rate that's an expression of how much it's costing you to borrow money. Now, a mortgage APR is very confusing and is something that I'm willing to bet not even most loan officers can explain. So APR, annual percentage rate. When lenders advertise interest rates for mortgages, they usually advertise them in 0.1% increments, meaning you'll see a mortgage advertisement for 3.5%, 3.625%, 3.75%. So if you, the consumer, are just shopping around for a mortgage and one lender is at 3.75% and another lender is at 3.5% on the amount of interest that is being charged on your money, you would obviously go with the 3.5% lower interest rate. However, there's a lot of hidden little tricks in the mortgage industry. And sometimes in order to obtain that lower rate, in our hypothetical situation, 3.75 versus 3.5, in order to obtain that lower rate of 3.5, the lender might have you pay a lot of additional fees to obtain that lower interest rate. So the federal government came out and they said, hey, we need to give consumers a way to compare apples to apples when they're looking at different financial institutions. So let's say, for example, you're evaluating two banks for your mortgage. One has a rate of 3.75 and one has a rate of 3.5. That's going to change the monthly payment and the interest rate on the money that you're borrowing and therefore your mortgage payment. However, like I said, that doesn't tell the whole story. APR was created so that you can compare the overall cost of obtaining the mortgage. So if there's a lender who's offering 3.5 or 3.5, but they're charging you $5,000 up front in order to get that lower interest rate, you may be better off going with the higher interest rate at 3.75, and the APR can help you analyze this. Because what the APR does is it takes the total cost of obtaining the loan, including upfront costs, and it expresses it as an interest rate. Therefore, you might find a situation where the rate on your money is 3.5, but the APR is 3.95, meaning that there's a lot of costs associated with getting that lower interest rate. So when you're comparing mortgages, yes, the interest rate matters, but frankly, getting approved for the loan matters more than anything. However, an additional tool that you can use to compare different lending sources is this idea of an APR, which takes all the costs associated with the mortgages, expresses it at a single number, and allows you to make a better comparison between financial institutions. If you have any questions about an APR, about mortgages, about obtaining a mortgage for yourself, our team is here for you. We're licensed in 8 different states. We've got loan officer referral partners in every state across the nation. And leave a comment here on YouTube, on Facebook. Shoot us an email if you have any further questions about a mortgage for you, or you'd like us to do a mortgage mystery video on a topic that we haven't yet covered.